Welcome to the Daily Update. This is being prepared Tuesday, March 1st, where we'll go over the action in the market today and then see how things look for Wednesday, March 2nd. And it was a pretty negative day. In yesterday's video, I pointed out some positive things that look like it could potentially offer support for prices going higher, even though our technical picture remains negative. Well, with the decline that we saw today, again, not a lot has really changed. We're just shooting back down to where we've been before, but a lot of that positive stance that I was talking about has pretty much been removed now. And so we're going to have to see some kind of a bounce or something for things to turn back positive. In the meantime, now we're looking at things being more negative overall. So let's go back over what happened on Tuesday. The futures were down pretty strong during the night, but as we got closer to the open, they started to recover, and we ended up having a flat open when the stock market opened in New York, and that can be seen as somewhat positive. It was looking like, well, maybe we'll be able to carry through with something. Well, because of the geopolitical backdrop, because of all the different things that are going on right now, people are in mass, at least investors, they're not really excited about going long, which would push prices higher. Everybody is more in a real defensive stance right now, which is very understandable. As the day went on, we did see prices drop. We fell down to the S2 level, which was around 42.89-ish, right in there. But once we hit that level, we bounced back up to S1 at 43.30, around that level. So it was another technical day where the pivot points that we draw before the market even opens, they were being used by a lot of investors, traders, and the algorithms that are out there that do the computer trading. As we approached the close, there was some late day selling. We went back down to S2 again, which is kind of a retest of the daily lows. And if we stayed above that, that could be seen as somewhat positive. And right at the close, we saw some buying. The last 10 minutes saw a real spike up in buying to help make it look a little less negative for the day. We ended up being down 1.55% overall. Volume continues to be above average. What we're watching right now is that the technicals are still negative overall. There are some positive things that we can look at, and I'll try to point those out as we go through the charts. We're still dealing with earnings. We're still battling with inflation and interest rates, which interest rates really took a dive on Tuesday, which you kind of have to step back and go, we're in a high inflationary environment. We're in an environment where it's almost a 90% chance that the Fed is going to raise interest rates, not very much, by just a quarter. So that's almost negligible with what we're dealing with inflation at 7.5%, which in real terms, based on how we used to calculate it, could be 14, 15, 16% or even higher. And so why are interest rates falling? There's a real contradiction, or so it seems to be going on. There is some talk that I've been hearing. I don't necessarily fall into this camp, but I'm hearing more people talk about this, that as we see interest rates decline, are we looking at a possible recession? Now, GDP came in pretty strong, and the definition of a recession is negative GDP for 2 quarters in a row. So we have to really decline for that to happen, based on declining growth of the economy. But I'm hearing some people that say this I agree with a lot. Other people that are saying this, sometimes I do, sometimes I don't. But it's just something that we want to be aware of. With all of the crazy things that are going on, we're seeing interest rates going up, sentiment going down. We're seeing inflation going up, but right now interest rates are going down, when really to fight inflation, they should be going up. Back in Germany, the 10-year yield has now dropped negative again. It had been positive and going higher, but with everything that's happening right now, they've slipped back negative. And then geopolitically, what's going on between Russia and Ukraine? Right before I started recording this, I was listening to a podcast, and during that podcast, it was announced that Ukraine has asked for membership in the EU. Now, the EU is not NATO. The EU is more economic based. Well, if you remember Brexit, England left the EU after being a member. Well, one thing that Ukraine has been trying to do for a long time, at least Western Ukraine has, is they want to join EU. Is that a real game changer? Maybe, maybe not. It just means that if they're accepted, and this can be a process that goes on, this means that they're more buddy-buddy with other countries within Europe. Where it really becomes a big issue, and what a lot of people are saying, no, 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 don't let this happen, is if Ukraine is allowed to join NATO. That would change everything right there. And that would drag the US into any conflict that's going on in Ukraine. So that's not necessarily on the table as far as something that will likely happen, but it is discussed from time to time. And some people think, well, why don't we just include them in NATO? We can go in and protect them because we don't have any real alliance with Ukraine right now. But you have to think it through and look at the ramifications. Also, as I'm recording this, there's the State of the Union address, and I did not watch it. I willfully chose not to watch it this year, which is the first for me in my lifetime. No matter who the president has always been, I have always watched it. Whether I liked or disliked didn't matter. I was an American watching my president give a speech. This year, I chose not to, and I'll just leave it at that. I don't like to get political in these videos, and I'm not going to. I'm just going to tell you a fact. Okay, I was sleeping. I'm in a different part of the world and the time is different. Okay, we'll just use that as an excuse. What are some things that we can take away from what happened on Tuesday? The S&P is now back in correction territory. We had fallen, we were down 8%-ish, 8%-ish or so after Monday. Well, with the decline on Tuesday, we're back below 10% now. The fear index that I look at every day that I get from CNN Money, it's starting to show some extreme fear. And the prices were just bouncing around. There's really nothing going on right now, except the ADX remains strong and showing that we're in a trend. And so anytime we have a downward movement, it picks up on that and suggests that the trend is strengthening. And so we remain in this range, but yet it's still being defined as a trend. Russia, Ukraine, of course, continue to dominate the news, and that's an ever-evolving situation right now. It could escalate at any time. Things could get ugly. A lot of attacks are taking place on the second biggest city in Ukraine. There's also there's a 40-mile long caravan, I guess, waiting to go in and take over. So, and these are things that produce a lot of uncertainty and a lot of fear. And so that bleeds over into what is happening in the market. If you have 20, 30, 40, $50,000 or $500,000, are you going to throw that into risk's way when there's all this uncertainty on the horizon right now, where a large chunk of whatever you put in the market might vanish? And so think about the mental game that goes on behind a lot of this too. And as I stated at the beginning, interest rates are falling fast right now. Now, they could always change. We could see bonds go down and interest rates go back up. But over the last few days, we've seen a real decrease in interest rates, and they are negative again in Germany. And I'll show you that chart. There were some economic reports that came out on Tuesday, and they showed strength in the economy. So that feeds more into the inflation scenario that we've been battling. We continue to be overvalued. And again, I want to make some videos about that, but I'm just having some time constraints and focus constraints with being able to put those things together. Our trend is strengthening with the bias being negative as well as the momentum being negative right now. So let's go through and talk about what happened on Tuesday. First, we look at the sentiment, which we're down below 20 now. We have a reading of 18. Once we drop below 20, that's where we're showing extreme fear. It could still go lower from here, but now we're getting to the point where overall, the indicators used in this index are starting to show extreme fear. And then here's the chart, which just shows us dropping below this line, below 20 right now. The VIX is also showing fear. We saw a real spike up as prices declined on Tuesday. So on a closing basis, the VIX really went up. It didn't go up quite as much on the bar. We were at a higher point during the day. That might have been some of the buying that came in that helped provide some support, and then some buying right at the end, right near the close. So it looks a little bit worse on a closing basis where we're about 2/3 of the way up the bar as far as on the daily bar. The VIX of the VIX also saw an advance based on the closing basis and kind of ended near the top 2/3 of the bar on the bar chart. The ulcer index, as we go down, fear is continuing to climb, and this could go higher. And then just to show you, this gives you more of a longer term look. There's no really set values for how high this can go. You can see how it really spiked during the COVID plunge. We just kind of have to watch this and then see when it begins to roll over. As far as the different sectors, 10 out of the 11 sectors were negative. So it was a broad-based decline. What was interesting is it looked like the value area got hit more than the growth area. You can take that as either positive or negative. But the financial sector, materials, they were down the strongest. Technology, which is a growth play, that was down. Discretionary, another growth play, that also declined. The one sector that was up, and up pretty strong, over 1%, was energy, because we're seeing oil prices now up over $100 a barrel. And here's what it looks like going back to the January 4th high. Energy is in the lead as the sector that is performing the best, with discretionary doing the worst, and then our usual suspects that have been having trouble: communication, technology, real estate, they are declining right now. As far as inflation, the BDI did spike up a little bit on Tuesday. I'm still waiting for this to tell me something that I don't already know, and it's not doing it. And I'll try this for another week or two. I'll keep this chart, but I may stop including it as part of the daily video because I'm just not convinced that it's really giving us any insight. What I do find helpful, though, is the CRB index, and that's why I've moved this chart over, because it was up over 4%, 4.33% on Tuesday. And this is really suggesting inflation right now. As far as the Fed, we are at a 94.4% chance that they will raise rates between 1/4 and 1/2% at their meeting coming up on the 16th. Is that going to be enough? We have inflation a lot higher than that. If we do go into a recession, it's not like they're going to be able to lower them very much to get them back down to zero. So there is some potential problems on the horizon with all of these things that are going on right now, and some of them are contradicting each other. And so you have a market that is uncertain. But here we see where the 1/4 to 1/2 is increasing in probability, as the 1/2 to 3/4 is decreasing in probability. As far as the technical alerts, they were mostly negative, and even the positive ones on a consumer level you could take as negative. Energy set a 4-year high. Yes, if you have to fill your car up, if you have to heat your home, if you have to use energy of any kind, that sector has been doing well. So you're happy as an investor, but not very happy as a consumer. The S&P 500 had a bullish MACD crossover, and I'm not seeing that. If it crossed over earlier in the day, it crossed back over later in the day. And so I dispute this one right now, where the NASDAQ was having trouble. It went below 13.7, then 13.6, then eventually below 13.5. The euro set a 52-week low. That's good for the dollar, and the dollar is still holding up pretty well right now. The materials, they crossed below 50 for the BPI. That is more negative, and that's a value play. Toronto has been having some trouble in the Canadian stock market. And then oil sets a 4-year high. Again, you're either happy or not happy, depending on your perspective, or maybe a combination of the two. And then oil also went above 100. So intraday, we had a flat open. And the futures, they were down pretty heavy, about 1.5% throughout the night, but they came back into the open and gave us a flat opening. But then we battled it around a little bit to begin with, and then the selling came in. We dropped below the daily pivot. We ended up going down below S1. We bounced around a little bit and made it almost down to S2. In this area, we saw a little bit of a bounce up, back to S1, prices then went back down to S2, but this kind of saved the day from looking worse than it really was in the last 10 minutes, we saw some buying coming into the market. So we're just above the 4,300 level right now with the S&P. Here's what it looks like on the daily chart, where we've been here before, folks. We might have a chance of shooting higher, but because the market is more negative right now, we ended up shooting down lower, but we're still above this longer term support. That could be seen as positive, but our technicals are continuing to show weakness. We are now down 10.22% since the all-time high, so we are in correction territory now. Here was the high set back in January. Here's where we're at right now. And this just shows you the difference between the two. And this is what I'm talking about. With growth, with the decline, you would have thought that this would have declined a lot more than it did. And it just blipped down a little bit. Where value, you would have expected this to increase. Well, it just kind of went flat to sideways. So we didn't see that the battle taking place that still continues, but at least it didn't play out to a large degree on Tuesday. Here's showing the two indexes, not a lot of change from Monday to Tuesday, but this just shows that growth has weakness right now because we're below the moving average. The NASDAQ 100 also underperformed the S&P, but not by as much as maybe you would have thought it would have. This can be seen as somewhat positive right now, but we also have a more negative backdrop as well. With our trend, the ADX continues to be well above 20. We're above 30, which suggests kind of a strong trend. But as we've been battling this sideways action, it's like if your trend is just a couple of percent up or down, that's fine. But if you're looking for a longer term trend that you can really ride for a while, that's just not happening. The selling pressure actually decreased a little bit with the ADX, but the buying power also decreased. Then looking at our mass index, we're out of signal land right now. So this is on the books currently, and we're just waiting to see, is something bigger than what we have been seeing going to happen, either to the upside or to the downside. Our Arun is kind of showing the same thing. We saw selling pressure taper off a little bit, buying it decreased slightly, but sellers are still in control, but they're not pegged all the way to the top. So our oscillator, or the difference between the two, is negative and was really pretty much flat from Monday to Tuesday. Decision point scoreboard has not changed. We are negative with our PMO signals in the short and intermediate term, where the long-term trend is still up, but as I keep saying, showing signs of weakness. As far as the breadth, we were negative based on price and volume, and we're starting to see more of a rollover again based on price. We're in danger of dropping below this moving average. We do have that negative divergence that's been taking place on volume, between volume and price, and we saw a continuation of the decline, and now this line is beginning to roll over. The advanced decline ratio, because we had a down day, continues to be below 0 and is declining, and still could go down further before it gives an extreme negative reading. New highs and new lows. This is a little bit encouraging. Even with the decline on Tuesday, we saw more new highs than new lows generated, and this is starting to turn up. And as this rotation goes on in the market, stocks that were beaten down, stocks that weren't big plays before, they're starting to see buyers as the growth stocks are going down, and a lot of those stocks are now generating new highs. And then the 10-day moving average also is turning up slightly. Our accumulation distribution, it declined a bit, but not as much as you would think, with a 1.5% decline, because we're just bouncing around where we've been before, but we remain above the moving average. So that's somewhat negative, somewhat positive. Short term, we're well below the 20-period moving averages. In our moving average study, we saw a decline based on the 20, 50, and 200-day moving averages within the S&P 500. The spaghetti moving average chart, we're starting to get to the point now where some of our shorter term moving averages that I have on here, the 20 periods, they're declining so much that they are getting close. They've already crossed the simple moving average. Actually, let me see. They've already crossed through the simple moving average, and they're in danger of crossing below the exponential. I've got the colors over here, and they're not very pretty colors, so sometimes it's hard to tell the difference. The MACD, this is what I'm talking about. For a while, maybe near the beginning of the day, this did drop, because this updates as the market's open, where what you see that I post on here are all closing values. By the time we were done, it lost that crossover signal. The STO is looking a little more positive, but it can lag sometimes. It's still showing an advance based on price and volume. So sometimes it seems to be right on and it's mirroring what we're seeing as far as price. And then we have days like Tuesday where it seems to be going in the opposite direction. The McClellan oscillator continues to be negative and is declining. Our short-term oscillators, we've dropped below the 0.5 level, or the mid-range for the Stoke RSI, and we've also dropped below 50 with the Williams %R. The force index is now switched back to negative. Intermediate term, we are well below the 50-period moving averages. The PMO, it looked like it might be getting a little better, but with the decline, it's rolling over again. So it is negative based on price and volume. Our other PMO study shows a decline in those PMOs in the S&P that are rising, a little bit of a decline with those that are generating buy signals, and flat to a little bit declining of those that are even positive right now. The BPI, and I'm adding another chart in here to give a little bit longer perspective. It showed, even though it was down, it did show a bit of an advance overall. And just to give you kind of a longer term perspective, here's the whole COVID plunge and everything just went crazy then. But we're getting down to this red area, which can be extreme negative. But going back to this chart, the last few days have seen somewhat of an improvement as the bullish % indexes start to increase slightly. And there's the long chart. Our moving average rainbow is starting to roll over even more. We are now at the very bottom part of the rainbow. Stochastic, short-term negative and below the midpoint, intermediate term flat, trying to advance, longer term trying to cross over positive. So we're getting a bit of a mixed picture there. The summation index declining based on price and based on volume. Our oscillators are pretty much negative across the board. It looked like they might be improving. Here's the MACD right here, but it's still negative, with our other oscillators also either decidedly negative, or what improvement we might be seeing looks to be going away, especially if we see more follow through selling on Wednesday. The praying, we're kind of getting far away from this signal now. That was generated quite a while ago, and nothing has really been happening since then to suggest that we're going to move a big way one way or the other, because we still are in that range. Vortex up a little bit based on selling, down a little bit based on buying. CCI rolled over just a little bit after coming off an extreme negative reading. The Sean trend meter, it also looked like it could be showing some improvement, but it is now going back down. CMF, positive still, but beginning to show some weakness. And then I know a lot of you use the RSI, and I think it's okay. You know, like I've said before, when I teach technical analysis courses, the RSI is the first oscillator that I talk about, and it's the one that's usually in most of the books and most of the classes that you can take. I don't necessarily rely on it that much. Sometimes it's helpful, sometimes it's not. I'm going to start including that, even when it's not really telling us all that much, because I know a lot of you rely on it and do use it. And I've tried all kinds of different settings over the years to come up with some kind of useful nature for this. I just stick with the default settings, which are at 14, but we are below 50 and declining with the RSI right now. As far as our trading systems, the Elder with the down day switched back to a red bar, which is negative, and the MACD is declining and below zero. SAR never did turn positive, and so it continues to give us a negative signal. Our different charts, the Heiken Ashi is giving us more of a doji type form, where the open and the close are right about the same. The Kegi showing a little bit more weakness. This red area is getting just a little bit bigger now. Really no change now on the Renko because we've been here before. The three line break, it's still showing the bit of improvement right now. But if we fall below where we're at and we break support, expect this chart to redraw and look more negative. If we can bounce up from that, then this might look more positive. Equivolume. Again, you can see this is where we've been at. So nothing has really been decided on a longer term basis, and we are declining with the ease of movement right now, and we're below zero. The point and figure chart is not, the last signal that was generated is, here's a pole, and with these 4 X's that came in after the solid end to the week that we had, it like that, and it's thinking that this might be a pole reversal. Well, nothing happened to change that on Tuesday. Retracements, we are still coming back down, and we're right around the 50% retracement from this low, or this low back in early 2021 to the all-time high. Longer term charts, our arithmetic scale, again, this line continues to go up, but we are below the 200-day moving average. The longer it stays, the more negative things will turn. Here's the logarithmic scale, also below the moving average. And same story for that. These are identical charts. They're just plotted a little bit differently. The special K continues to show a decline, and the longer term chart is showing the same thing. Broad market, S&P, we're kind of in the lower end of this big range that we've been in for quite a while now. Mid caps back within the range, small caps back within the range. The FANG stocks weren't down as much as you thought, and that's why I'm kind of leaning more towards growth didn't get really hit hard. It was more the value stocks that got hit on Tuesday because we only saw about 0.36% decline in the FANG stocks overall. And you might say this is a little bit positive. We set our low last week, and we've been seeing a series of higher highs and higher lows as we've been coming up here, even though we had a decline on Tuesday. But it's going to need to do a lot of work to look better than it does right now. ARK was down 3%. So Kathy was really happy a couple days ago. She's not as happy today. The Dow, again, back within the lower end of this range, taking out this extreme reading that we saw last Wednesday. We're getting down here near the bottom end of this range that we've been in. Small caps also back within this more congested range that we've been in, and mid caps as well, kind of mid range. Then we crossed over with the NASDAQ composite, and we're slightly below the pivot. Now we have a new month, so new pivot levels have been drawn right here, and these last for the whole month on the daily chart. And we are below the daily pivot for March, so that is negative. If we can break back above that, that would turn things more positive. The NASDAQ 100 is also below the pivot, and we're looking at a death cross with the moving averages. The Vixen, it also closed in about 2/3 of the way up. So fear did increase, but it had been higher throughout the session. Net NYSE back within the range. And then here's another one. The S&P 100, it actually advanced. So this is suggesting that the bigger stocks outperformed the smaller stocks in the S&P 500 on Tuesday. So that might be a little bit positive, but they weren't necessarily the growth stocks. Wilshire back within the range again. Worldwide, China's rolling, everything's rolling over right now. We're seeing prices decline pretty much across the globe currently. And here's our all world index where we're coming back down and getting close to the low that was set just last week. Broad market indications are the dollar. Yeah, we're getting into the 97 territory. If you want to do any traveling into a war zone, you have a very favorable exchange rate right now. And then here is day 2 of our weekly chart, which is also showing a pretty strong uptrend. Again, eventually the dollar may fall apart, but today is not that day. Oil up, we closed at 103, almost 103 and a half, as things just continue to spike. And now I'm also starting to include the futures chart, the continuous futures chart for gold. I have a shorter term chart here, which goes back about 1 year, and it shows that we did have a 2.25% advance. We're right at about 1943 right now. I usually follow the GLD, the ETF for gold. Well, I'm going to start looking at the futures contract, and we're getting above where we were back in 2021. And then this is just a longer term view of that same chart. We still have quite a ways to go to get back to, what was this, October of 2020 or so, when gold really broke above 2000 only to fall back down. Here's the GLD. They're supposed to have a 1-to-1 relationship, but they really don't right now. And we saw a 1.82% advance in gold, at least in the metal itself. Silver also saw a pretty big advance, and we've been able to stay above this longer term moving average, which had been acting as support. It was up over 4% on Tuesday. Bitcoin, which is still continuing to recover, we're getting back up into the mid 40s now as far as the price for Bitcoin. Bonds, this is what I'm talking about. We're seeing a real tightening type policy. But if this thing continues to fall and we get down to this red level, it doesn't mean there will be a recession. It just means there is a strong probability that we could be going into a recession. So we want to keep watching the credit spread here. And then with interest rates, it looked like we were going to be breaking out to the upside as far as the yield on the 10-year. Well, we broke down below that, and now we have really fallen. We were up over 2% just a few days ago. Now we're down at 1.7%. And then you can also see it's pretty pronounced here. The 30, big decline, 10, 5, 2, all declining, and the 3-month even declined. Then internationally, this is where Germany, this is the blue line, they had been going strongly positive, and we're actually beginning to outpace Japan as far as the yield. Well, over the last few days, we've seen a cliff go down here. And bonds, even though they increased quite a bit in the US, worldwide, they were up a little bit, but they're still in an overall pretty strong downtrend. The corporate bonds really saw a bounce in price over the last few days. And as price goes up, interest rates go down. So we've fallen a little bit down to 3.26% on the corporate bond yield. And again, this is just a longer term view of that same chart. Our relative studies, I've been looking at gold. I've got another one that I'm going to talk about here too, but gold is continuing to show a breakout in relation to the S&P. But what's also interesting is you're seeing the dollar show strength, and you're seeing gold show strength, and they tend to move in opposite directions. So that's one of those things that it's like, okay, what's going on here? And that's why you have a lot of confusion in the markets right now. We have interest rates falling when logically you would think they should be rising. And if gold is going up, you would think the dollar would be going down. Or if the dollar is going up, you think gold would be going down. See how it's not necessarily complicated to be involved in the stock market, because it could go up, down, or sideways, but it doesn't mean it's easy. And there can be conflicting signals from conflicting directions. And then here, looking at energy, this is the other relative chart that I want to include, at least the daily chart. This is XLE in relation to the SPY, and it is really continuing to break out with the moving average going up. And then I haven't included this as much. This is just going back 1 year, and this is intermarket analysis. And you can see where oil is just shooting, just skyrocketing up, where the S&P has been going down. Gold is starting to go up. The dollar is showing a little bit of strength, and bonds, after showing some weakness, are also showing some recent strength. So what are we looking for on Wednesday? The S&P is back in correction territory. Expect the financial media to pick up on that if they haven't already, because they may calculate things differently. The market still remains in that short-term range. And I said in yesterday's video, and I might have to do this, I might have to change this to an intermediate term range. We still have earnings season. We still have the battle between growth and value. There was the State of the Union right before I started recording. The futures were up about 0.5%. Sometimes we get a little bit of a bounce out of that. You might also see some approval bounce from that as well. I haven't even watched a replay of it yet. I haven't watched any analysis or really read anything that was said. So I'll do that, but I'll keep most of that private because I want to focus on what is happening in the market. I don't want to turn things political. We have some economic reports coming out on Wednesday, the ADP employment change report. That usually comes out a couple days before the big employment situation report on Friday. And this was becoming like a good leading report to have come out a couple of days ahead. Well, the last few times we've seen a real difference between this report and the employment report. But that is coming out on Wednesday, not a big changer. The big one is going to be Friday. The Fed's beige book that comes out, I think, about the last hour the market is open, not really paid attention to. And then we have the weekly mortgage applications index, which is not a big market mover. So we do have some things that are coming out, but they're not really big. The markets are really focused on the geopolitical events with Russia, Ukraine leading. The Iran meetings continue to go on, but they're really taken a back seat as far as the news. And then we have the State of the Union and how things will react or not react to that. So our conclusion is the S&P is negative and range bound, continues to be that way. Short, intermediate term are negative. Yesterday, it looked like they could be improving. Now it doesn't look like that. The long-term bias remains positive, but we're below the longer-term moving average. So that's showing weakness. And the longer we stay under that, the longer the uptrend looks to possibly be fading. So thank you. I hope you all have a very peaceful and good Wednesday, and I will talk to you again after the market closes.